Caterpillar stock presented quarterly earnings today and the stock went up 5% before the market opens. Right after that the stock went down again. And Caterpillar reported an EPS of $5.23, beating analysis estimations by a significant amount. Revenue was reported at $17.1 billion and missed the estimations. But people love Caterpillar stock for different reasons, and one of them is the dividend. And I understand why, with dividend yield at 1.65% and 30 consecutive years of dividend increases. And if we look at the total returns in the past 5 years, we see that Caterpillar stock crushed the S&P 500. So could this be the perfect time to buy Caterpillar stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. And more importantly, which price target is the most justified in my opinion. And I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Caterpillar do? Caterpillar is the premier manufacturer of heavy equipment, power solutions and locomotives. It's currently the world's largest manufacturer of heavy equipment. Its products are available through a dealer network that covers the globe with about 2,700 branches, maintained by 160 dealers. Right off the bat we see some interesting key takeaways, with revenue reported at $17.1 billion, up 3% year over year. But take a look at the operating profit, up 87% year over year. Adjusted operating profit is up 15%, which is also a great number. Profit per share was reported at $5.28, which is a great number, up 89% year over year. For the full year we see similar numbers, great increases on the revenue, but the profit is increasing at a higher pace, which is a great thing of course. Free cash flow was above the target range, and in total Caterpillar returned $7.5 billion to shareholders in 2023. Of which $5 billion in share repurchases and $2.6 billion in dividends. Caterpillar is also a dividend aristocrat. In here we see that the construction segment, representing a big portion of the revenue, is down year over year. However, the profit margin increased a decent amount. The second segment, resource industries, also reported a decline in sales of around 6%. But again, profit margin increase, which is the positive thing here. Energy and transportation, one of the biggest segments, is up 12% in revenue, but also the profit margin increased, so this is looking really good to me. The last segment, financial products, is up 15% in revenue, and also profit margin increased a significant amount. For the full year of 2024, Caterpillar expects to deliver similar revenue results to 2023, and profit margin to slightly increase from here. And now that we know a bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. And let's continue by diving into the fundamentals. Caterpillar stock is a 164 billion market cap company. PE ratio is at 18, indicating they could be undervalued right now. Later in this video I will show you my 3 price targets for Caterpillar stock, so make sure to watch until the end. And in the meantime, please let me know your thoughts on the current valuation on Caterpillar. And I'm also interested to hear your thoughts in general on this company. Revenue is at 66 billion, and in this graph we see that revenue went up and down quite a lot. And this is also very common for a company in this industry. However, I always prefer a bit more steady in pattern here. Margins are going up in the long run, and this is really important to me. With revenue being a roller coaster, you want the margins to increase at a decent pace. EPS is looking pretty similar to the revenue and the margin. In general, I would say this looks pretty good. Analysis expect that EPS will decrease in the coming years, mostly because of 2 analysis projections in 2026. For the revenue, analysts expect 73 billion in 2025, with a low single-digit growth rate per year. Return on assets is sitting at 5.8%, which is a decent number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at 18.4%, which is a really great number. It is also higher versus the 5-year average, which is a good thing. Current ratio is at 1.45, which is a decent number. Nothing really special to mention here, to be honest. And right now Caterpillar has 37 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Caterpillar has 8.4 billion in total cash, so they can't pay down a big chunk of their debt. This is something that I don't like. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run. However, it is not really steady and consistent, but in general it looks good to me. Shares outstanding are decreasing, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 1.65%, which is a decent number. Annual payout is at $5.20 and payout ratio is at 25%. I prefer 50% or lower, so right now they have 75% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at almost 9%, which is a great number. They have increased the dividends for 30 years in a row, which is very impressive. And if you take a look at these numbers, the dividends paid since 2012, you see that Caterpillar did increase the dividends at a decent pace. Most recently they are increasing this pace again to high single-digit growth. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see the payout ratio is in a healthy range. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a similar rate versus previous numbers. And overall these dividends look really good to me, but how about the historical returns? I decided to compare Caterpillar stock with the overall market, in this case the S&P 500. On the 5-year chart we see that Caterpillar crushed the S&P 500 with 171% return versus 98% return for the S&P 500. This result is including dividends. Especially 2023 was a great year for Caterpillar. On the 1-year chart things look pretty interesting, with both great returns. Caterpillar is sitting at 31% return, again crushing the S&P 500 that returned 20%. On the 6-month chart it is again Caterpillar that is having the highest return with 19%. The S&P 500 is sitting at almost 10%. On the 1-month chart it is again Caterpillar with the highest return. So bottom line, Caterpillar beats the S&P 500 in the long run but also in the short run. So is this the perfect time to buy Caterpillar stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 3, 4 and 5%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 13, 14 and 15. For the free cash flow margin I'm putting in the same numbers. For the PE ratio I'm putting in 18, 19 and 20. And for the free cash flow I'm putting in the same numbers. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now Caterpillar stock is around $321. I hit analyze and we see a lot of red numbers. We have a low price target of $226. We have a mid price target of $270 and we have a high price target of $321. To me, the mid to high price target is the most justified here, meaning the stock is overvalued according to these numbers. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on Caterpillar stock is that I really started to like this company. I think the results were great and they just reported, and also the outlook is looking really promising. Most fundamentals are great and they have plenty of room to grow. The problem for me is basically that revenue isn't really consistent and is lagging a little bit right now. Other than that, most things look great. From a dividend point of view, I think this could be a great dividend growth stock with a reliable track record. From a value point of view, the stock isn't that interesting right now. However, if they manage to increase profit margin even more, things can change very quickly. So for now, I will put them on my watch list and analyze them from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.